Hey, what's up, guys? Wanted to do today's video on the 9 reasons why successful people choose real estate as a vehicle to invest their money in versus other asset classes. Like you guys all know, like where else you can put your money. You can invest your money in stocks, you can invest your money in bonds, gold, Bitcoin, your own business. But successful people who are trying to build wealth, the wealthy have always leaned on real estate to put their money at. And for me, there's a lot more reasons, but I'll go over the 9 because these are the ones that really resonate with everyday investors. Like even if you're the number one in middle class investment, right? So one thing, and I talk about this a lot, is the number one reason why anybody successful wants to invest their money in real estate. Number one is for capital. This is the best way for you to preserve your capital. It isn't Bitcoin, it's not stocks, it's not bonds and treasury, it's not any of that stuff. If you're going to preserve your money, where you know real estate, and I'm talking about multi-family real estate, number one way is to protect your capital because it's there, right? That's the number one thing. You guys have seen this over and over from the even Jesus, the wars in the Bible are about real estate, all of them. So it's there for you. That's number one. So number two reason why successful people invest their money in real estate is the passive income. Most people want passive income. Even if you don't need, like somebody like benefits, right? They have so much money coming in from revenues from their business. That doesn't matter. But I can tell you, it's nice to get that grip. You get a deposit in your account every month from a real estate going up, up, up. When you stop getting it, so passive income is another reason why successful people love investing in real estate, especially income real estate, like the stuff we look at, right? Very important to know that. So one more time, that is the appreciation opportunity. Look, right now, Jerome Powell is on there talking about hinting, kicking down the road, saying, "Hey, look, September we're probably lower rates." Because at some point, your future appreciation, you may invest in real estate. You understand that if it's a real asset, meaning like it's bricks, that because it's going to appreciate in value based on inflation, like period. So while they're going to lower rates, what do you think is going to happen? At lower rates, people are going to start spending and borrowing money. What are going to do with the money? Think of that. You're going to spend it, and because you spend it, what's going to happen? It's going to inflate the value of something real all the time. That's how it works. Now, the difference of if you're going to invest in income producing real estate is that the income base, that's what makes it go. So the real income and the additional income from any real estate deal from multifamily real estate, if you go do a valuation on that, the increase of income makes the value of that property go outside inflation. So there's a controlled appreciation or valuation that continues to go up. You can't do that in a lot of stuff. Stocks, you can't do it. You can do it about the stock. You can stock all down, but it's not going to be something that you can bet on over time. It's just not. That's why successful people love income producing real estate. So the next thing is the tax advantages. Look, the more money you make, the more you're going to pay taxes. And if you don't have a way to be able to shelter your income from getting eaten away with taxes, because he's always, hey, I need to make sure that this is on the front end for me, right? Because where he's in his investment career, everybody has a work for investment. Some people for tax benefits, some people for income, some people for the write-offs, all the things which are the tax benefits. So you have to know that going in the door, and that's why successful that this asset class, this vehicle, that's investing. Look, you're investing capital. You don't want the accelerated depreciation, cost segregation, pass that on to you, so you can consumer. As opposed to some you invest in savings or a bond or something, and you're getting 4%. Well, if you pay 40% in taxes, if you're in a 40% tax bracket, you're getting 4%, really, you're getting 2%. Because that gain, you're going to tax on that. And you don't have to pay tax on 5%. That's like getting 7% return on your money. I know it's a little complicated. Stick with me on it. But that's the benefit of why some successful people, all successful people, is a best tax hedge for you to be able to invest your money in and park your money long term. All right, next is leverage. You want to put a stock, stock different. When you invest money in real estate with good data on it, leverage, every dollar buys you a $3 position in real estate. So if you invest $1 million in a deal, that $1 million should get you a $3 million position in that deal for value, right? That's why I love real estate, because that's one of the very investments you have. The leverage of your dollar gets you more is way more beneficial. And that's why successful people like you guys do it. All right. Next, it's an inflation hedge. I've been talking about that. So, in my lifetime, I was born in 1973. The dollar has lost 86% of its value. As a matter of fact, during COVID, over the last 5 years, the dollar's lost 25% of its buying power. What does that mean? If you had $1 million in the bank and you left it there 5 years ago, that'll only buy you $750,000 worth of goods in today's world. That's all that investment opportunity will warrant for you because inflation, like it raised the value of everything. So your dollar buying power went down because it's not backed by anything, right? So real estate is not that way. Inflation actually works to real estate to the benefit of real estate because it's a real asset, which I'll go over in a minute. But because it's real, anything that's inflationary that's real goes up in value because it costs more to make it. It costs more to build it, hold it, manage it, the people who have to run it, labor, all of these things matter. So if you invested in something that has all that stuff associated with it, you get the benefits of an inflationary investment. That's why we love it. So the next thing from successful people, why people do it is like I'm talking about next. It's real, man. I can't stress to you enough how important that is. Like, look, everybody loves Bitcoin. Bitcoin's not real. It's real because people want it right now. But the moment people stop wanting it, it will become less real and people will get rid of it. Now, will that happen? No, it won't. But real estate is a real thing. Like I talked about, I think it was the it was FTX, the Sam guy that stole all these people's money and things like that. Now, it's a terrible thing to think about. But had that money been invested in real estate, he couldn't have stole all that money. The real estate would have been able to get liquidated and that would have went back to everybody. And I think I read an article that they're actually getting all that money back or a good bit of it, which is crazy. It's good for investors, but it's a real thing. Like I was talking to my buddy there, he lost money in an investment betting on something else, but nobody's gonna get their money back because it was an e-commerce. They weren't doing it anymore. But had he invested that money in a real estate deal, a multifamily deal, 200 units, that money would still be there. Like you have to see your multifamily investments. You invest, taking your money out of the bank, cash, fiat money, converting it to a real asset. You didn't lose your money. it's now sitting in the asset itself, which could be liquidated and you get your money back. You can't do that with stocks, bonds, e-commerce, all these other things. You can do it with stocks and bonds, but there you may come in at a loss. You don't have that when it's an actual real physical, has an address, been producing money for 10, 20, 30 years or 5 years, whatever. It's a proven asset thing, which brings me to the next thing. It's proven. Real estate's a proven asset class for 2,000 years. I think the Vatican's what, 2,000 years old? Still there, still people coming to it, still paying money to see it. There's probably real estate in your city right next to where you live that was built in like the 40s, the 50s, the 20s, depending on where you are in the United States or in your world. That some of this stuff may have been built in the 1800s. Still producing money, people still live there, people still pay their rent. That's the difference. It's a proven asset class as a vehicle for people to be able to invest their money in, get a return from. That's huge. That's why successful people continue to use real estate as their vehicle. And then it's hard to disrupt. You know, me and a buddy were talking about this. We were laughing about it yesterday. We're talking about the guy. I don't know. I didn't read the article, but he was telling me. So correct me in comments if I'm wrong. He was like, I guess the guy that's going over to Meta that they paid $1 billion for to run like their AI stuff, he was saying he was waiting to have kids until like, I don't know, like the chips are done so he can put some download, put something in their brains. And we were laughing. I was like, well, if you're waiting, if you're going to wait to have kids for that, that's great. But real estate's probably a better play, right? Because that kid with that chip in his head is still going to need somewhere to live. People will always need a place to live. So real estate is very hard to disrupt, right? Especially multifamily real estate. Uh, but here's the other side to that. Let's just say the only way to really disrupt real estate's disrupted when there's a debt problem. Like right now, Powell and raising the interest rates and stuff, it actually slowed the market down where the big players couldn't go get debt, and that caused real estate to slow down. Not gone, not when I say disrupt, I mean gone. Like Kmart, gone, Kodak, gone, Polaroid cameras, primarily they're gone, right? Because you can't get the film. All of these things are gone. Sears gone. JCPenney's is gonna be gone. It's dying. I think it's a zombie company now. Like at some point, real estate's not multifamily real estate rentals, housing is never gonna go away like that. If the only way that it could be disrupted is if, and I think it could happen, is that they start being able to build homes and properties in multifamilies, like printing, like AI printing. They're already doing that. They already made like a Walmart. I think they just have a development that's going on in Austin right now that they're doing printing. So they're printing by building the home. So all the homes look like, the freaking Michelin man with those with the lines in them, but they're really nice. So the cost to be able to build those homes and the timeline it takes to build them is faster. So that could disrupt housing. But here's what that's going to do. One, you can't buy the equipment to do it as an individual, so you're going to have to invest in the company. I think it's Pulte Homes, DR, hold like it's a developer that's doing it as a test. But here's the thing: once that happens, the cost for the land will be so high that land is going to skyrocket. So it's still going to be a great investment. So yes, housing, the way housing can be disrupted. It can be AI print. You can print houses and you can knock out what would have taken 24 months to build a whole development. It could be done in 12 months. So you cut off a year, but the land to do that now will be skyrocket. Because if I have land and you want to print, I know you're going to do it. I'm going to rape you at closing. I am. I'm going to be like, dude, you're going to pay my investors a ton of money if we're going to do this with you. So as it relates to being hard to disrupt, that is how it could be disrupted. It could. The cost of land's going to go up though. Something's going to happen for you to still be able to use that vehicle to make more money than you could in the stock market, your retirement account, all this stuff. So this is why all the successful people I know, entrepreneurs, business owners, doctors, lawyers, professionals, all of them tend to move their money at some point in their lifetime to real estate, less risky real estate. I'm talking about long-term investments. If you're like 60, 70, 80 years old and you don't want to lock your money up for 10 years or 7 years or something, okay. But here's the problem. You're going to put your money into something that's more risky and it's not going to have the tax benefits that are going to pass through to you. So if you're 60, 70, I still say put your money in real estate. But it's got to be something that cash flows, protects your capital, and it's got to be something at some point when you're dead and gone, you can leave it to your family. You can push cash flow to your family. If you're you're in an investment deal. That's my goal for you guys. If you have money in a retirement account, you're 40, 50 years old, you don't need money right now. You need cash flow. You need to be able to focus on your income, your business, and grow your revenue and let your money work for you and let me go to work for you. And then you pump that over through your retirement account The money goes back to your retirement account, and you still have a piece of that real estate deal. So when you move on, you can have that move on to your family. You don't have to liquidate the real estate. You don't have to liquidate the asset. You don't need to kill the goose that's laying the golden eggs. You just need to live off the eggs. That's how it should work for you. But everybody's not taught that, especially depending on what you were taught growing up. If you're a middle class family, you were taught earn your money, save for a rainy day. Like that's not creating wealth for you and your family. People are starting to realize that. Successful people already know it. And this is the 9 things that they're doing. This is the reason why they invest their money in real estate. And I want to invite you guys to do it too. So look, if you have any questions, go to bell-capital.com. You can do 2 things there. You can schedule a call. Oh, well, you can do 3 things there. Call us or contact us, and we'll answer your questions. You can schedule a call, 5-minute call, go over any questions you have. We'll get them answered for you, show you what we're working on, and answer any questions about how we can potentially help you get invested with us. Or you can go straight there. You can hit get started and or get invested. Go to our portal, register there. You can take a look at our open fund, the docs. You can see everything that we have going on. You got to be accredited. Got to love real estate because we're a real estate company. We're only doing real estate. And you got to have a great attitude, man. I want to partner with people who are awesome. They're great. They're more interested in being successful than hating on people. That's what I want. And I want to do it with you guys. So what is the thing that is like, because I wrote these down. Well, like, what's the thing for you that stands out? What's important to you? Preserving capital, not losing your money. That should be, regardless, right? Whether you want to make a bunch of money or not losing money is just as hard as making it. So that you've already made it. Like, what's important to you on this list for you being a successful entrepreneur looking to invest in real estate? Is it passive income? Always, right? Is it the tax advantages? Is it capital preservation? You're like, dude, I just want to stock money and not worry about it. What is that? Leave it in the comments. I definitely want to hear. All right. So if you need anything, let us know. I'm here for you always. Again, go to bell-capital.com or leave me a comment, give me a thumbs up or a thumbs down. Subscribe to the channel. I want to help you guys. I want to talk to you. We want to see you, meet you in person. And we are having networking events. It's for our passive investor network. It's a network I'm building so I can help more people, meet more people, talk to you, and see how we can help each other, actually, right? Real estate's a contact sport. You need a network, and you're a part of mine, and I want to be a part of yours. All right. So if you want to be a part of that, go to bell-capital.com/RSVP. Put your name on the list. We'll let you know when we're having something. We're in California, San Diego, SoCal, but we're going to be doing stuff in other markets: Texas, Vegas, Arizona, Florida. Where else were you doing stuff? Georgia, all those things. So I want you to be a part of it if you can. So again, bell-capital.com/RSVP. Put your name on the list. Or if you want to get invested with us or you have questions, go to bell-capital.com/ yeah, that's it, bell-capital.com. And we're here to help you. So we'll talk to you guys soon. You have a great day today. Let's get after it. And boom. Are you an accredited investor with $300,000 or more liquid in the bank? I want you to come and partner with me. Look, if you love real estate, passive income, and positive cash flow, appreciation over long periods of time, and you're willing to be patient, come invest with me. Go to bell-capital.com. This is for accredited investors with $300,000 or more in the bank, ready to go. Come invest with me. Go to bell-capital.com.